Hello! Today we're going to talk about another important element in technical analysis, which is called support and resistance. Now, support and resistance is a place where price tends to bounce off several times and then might go through only to bounce the other way at the same price later. In other words, support becomes resistance and vice versa. Now, the areas on this chart show where you would want to buy or sell. You have to be able to recognize the boundaries of the field you're playing in. You need to know where price is likely to react. In other words, you need to recognize that the same areas make price react over and over again. I can tell you there is a lot of speculation as to why this thing happened. It doesn't really matter. What is more important is that it only matters that it does, meaning that we are only concerned that once the reaction takes place of these areas, what do we do? Okay, let's look at another chart. Now, do you think that the market is random? I don't think so. Notice how these areas repeat. I have colored the areas differently so they are clearer. So when price start to approach these areas, it's time to take notice for signals. Notice how price kind of goes back and forth over and over again. And if you zoom out in time, it becomes more obvious. Notice how price reacts every time it reaches the boundaries. With just a handful of lines, you can really identify all the so-called battle lines. These are areas where you want to fire your shots. You don't want to fire your rifle randomly at anything that moves. You want to be very picky of what your target is. And these areas, when you see price react of these areas in a certain way, that would be the time for you to pull the trigger, so to speak. So let's just go over some of the key points of support and resistance. Number one, longer time frames rule. Now, what do I mean by that? It simply means that the support and resistance areas that are formed on longer time frame charts would be more significant than those that are formed on the lower time frames. Not all support and resistance areas truly matter. Anyone can pull up a 5-minute chart and start drawing support and resistance areas, but do all of them mean anything in the big picture? No, not really. The second point is that support and resistance lines are not exact to the point. These are areas. They are not brick walls. Why? That's because markets are not perfect. And finally, those support and resistance areas, they need to be dead obvious as well. Meaning that it has to be obvious not just to you, but to a lot of other traders out there. When they all see the same thing as you do, then very likely they will have the same reaction. And this is what we want to be doing. So basically, if you are the type who are comfortable trading using support and resistance areas, and you draw your support and resistance lines using a higher time frame chart, such as maybe a weekly chart, then unless prices are at those areas that you have earmarked, there's nothing to do. No trade at all. That doesn't mean that you are trading only in a weekly time frame. It's just that you are using those areas as a guide for trading lower time frames. For instance, maybe 60 minutes or even daily. By using only the longer time frame support and resistance areas, such as weekly, you eliminate a lot of junk on the charts. Well, that's all I have to say on this subject. I hope you've got something useful out of this video, and if you like what you've seen, go ahead and hit on the like button below or share this video with your friends who may find the content in this video useful, or simply hop over to letprofitsrun.com for even more good stuff. Well, that's it for now, and I will see you in the next video.